Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we'll be looking at the technical analysis on the currency pair, the United States dollars to the Canadian dollars. And first, we'll be talking about usually fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart now. We have noticed the USD CAD sticks to a modest intraday gains and lacks follow through amid bullish oil prices, and of course the USD CAD regains some positive traction on Friday amidst a modest pickup in the USD demand, while Thursday's upbeat US macro data fueled hawkish Fed expectations and benefited the greenback. Now the bullish crude oil on the other side has the prices has been rising, continue to underpin the loonie and keep a lead on any further gains. Now, traders are eyeing the US PCE report for fresh impetus ahead of the FOMC meetings next week. And we can see, of course, that the USD CAD pairs attract some buyers on Friday and reverses a part of the previous day slide to the 1.3300 mark, or its lowest level since November 17. Now, the pair sticks to its intraday gains through the early European session and is currently placed near the daily top, just below the mid 1.3300. Now, the US dollar draws support from the mostly upbeat US macro data released on Thursday and edges higher on the last day of the week, which in turn is acting as a tailwind for the USD CAD pair. As a matter of fact, the US Commerce Department has already reported that expanded 2.9% annualized pace during the fourth quarter against consensus as estimated for a reading of 2.6%. Now, the stronger than expected growth figures could allow the Fed to maintain its hawkish stance for a longer period. This, of course, pushes the US Treasury bond yields higher and continues to benefit from the greenback. Now, what to expect this on a technical level? Technical levels to watch is, of course, today's last price at 1.3335 and today's daily change at of 0.0011 and today's daily change percentage of 0.08%. And today's daily open was at 1.3324. And we have in our daily SMA 20, 50, 100, and 200 to be 1.3445. For daily SMA 50, we have it to be 1.3504. And daily SMA 100, we have it to be 1.3522. While our daily SMA 200, we have it to be 1.3205, of course. Now, the levels, we have previous daily highs of 1.3408. Previous daily lows of 1.3303, previous weekly highs of 1.3521, and previous weekly lows of 1.3351. Now, these, of course, are having subtle effects on the market, but between now and the next move, we are expecting at least a move to the most recent support zone at 1.32109 and probable breakout. A probable breakout means it's going to be looking out for a new zone on the 1.29 zones, of course. So if we were to make an entry at this point and let our trade run down to the most recent support, we are looking at 96 to 100 pips here from that, of course, which is good money. Now, that's today's technical analysis on USD CAD. Now let's move over to the stock market. Welcome back, guys. And on today's stock market, we'll be having a look at Orange. Now, we have seen that shares in Orange SA has fallen on Monday after analysis of Jefferies downgraded their ratings, of course, and of the telecom company due to weak expectations for annual growth in its key French market. Now, we have been arguing about this, that Orange's performance in Europe's second largest economy will be stable going into the 2023 financial year. And due to the unit cost earnings, which are set to slip by 3% due to flat sales and elevated expenses. Moreover, the flag that prices for Orange services to new customers are not rising, while the firm's broadband position in less urban markets is facing much stronger competition. Now, Jefferies subsequently has lowered its rating for Orange to hold from buy and cut its price target to 10 euros per share from 12.4 euros per share now. However, on a group-wide basis, the investment bank still sees Orange delivering on its promised surge in growth heading into the end of its 2022 fiscal period. Now, the business is due to unveil its full year results on February 16th, while Paris-based Orange and many of its biggest rivals in Europe have seen their share prices drop over the past year as they contend with a spike in energy costs and an uptick in interest rates, of course. Now, what to follow up with this? Taking a look on the 1 hour time frame, we have seen a gradual rise projecting to what fundamentals has been saying. And this, of course, has made a breakout of a very, very important resistance zone. And we are looking out for a new zone on 12 at least, if not 13.22. We are looking at the 13.47 and also possibly the 14 zones thereabouts. So if we want to make an entry at this point, let our trade run up to at least the first resistance point after this major resistance. We are looking at 10 pips and an extension to the offside 20 pips and even more extension. We're looking at 30 pips, 40 pips thereabout from that place, which is good money. Now that's our technical analysis on today's stock market Orange. I remain your host, Nick. Bye for now.